let's take it then to the India Economic Conclave live in New Delhi.
Indian policy. So who else than he to tell us what is it that makes, what does it take really to make FDI fly in this country? So we're going to be talking about FDI and industry, wooing dollars that will stay. We don't want dollars that are fair weather friends. We want dollars who are here to stay. And then of course we have with us Mr. Bhargav, who will tell us what is it that makes FDI stay in India. We've got, one of the largest investors in India, Suzuki, who's become almost Indian. In fact, most people won't even recognize the word Suzuki, whereas the name Maruti, particularly in the north, really rings a bell everywhere. So we'll ask him, what is it that made Suzuki decide to stay on? So much so that when the Suzuki chairman came into India last year, he said there's just no way we're going to go away from India. But we also got Mr. Banmali from GE. They've been here since 1902, and we're going to ask Mr. Banmali Agarwala, why is it that GE is investing so little money in India? Why is it you've been here for more than a century? Here is Suzuki, relatively new entrant, and investing so much. What is it about India that GE has such reservations about? Mr. Rajan Mittal is there, so we're going to ask him, perhaps you could ask him, that what is it that makes a group like Bharti look outward? You're looking out. When you see whatever you're looking for there, do you not find them in India? Or if you were to put on the cap of an overseas investor looking into India, what is it that you'd like to see in India which you don't find in India and which you do find in many markets, particularly in Africa? So I think with that we'll kick off. But first of all, I'd like to ask Mr. Ajit Singh, is that, EY has recently brought out a report saying that India is the most attractive market for FDI, foreign direct investment. Mind you, not more attractive, but most attractive. More attractive than the USA, more attractive than China. At the same time, we're not able to get this potential to fulfillment, something that we spoke about in the first panel. What is it we need to do, and what did you do in the FDI sector that made it possible to see 3 quick deals in FDI, whereas in the civil aviation sector, whereas in retail trade, which we opened with so much hope and ambition, we've seen hardly any movement over there. What is it that made civil aviation different from retail trade? I know you'd like us to believe that that's because there's a minister in civil aviation and there's no minister in retail trade. But apart from that, what are the other reasons that really made FDI kick off in civil aviation and not in other sectors? Mr. Ajit Singh. Sir, to you.
Want to start?
Yes, absolutely.
Well, I think government liberalized the FDI policy long time ago, and successive governments have made efforts to attract FDI. But first we have to remember that for a long time our motto was self-sufficiency. And I'm sure at that point in time that was the right motto, and of course if you look at agriculture, that made us self-sufficient. At that time we were importing everything. And in many other areas, some industries came up. But the world changed. But our mindset hasn't changed. Still you can find people talking about, if you get foreign money, East India Company is coming back. So the fear that any foreign investment, the company's management will be taken over, they will rule the country if we continue to allow it, that's a big problem. And we are a democracy. So therefore, if that mindset is there, it affects how the MPs talk, how the ministers behave. Bureaucrats also many have in the back of their mind. So first we have to make sure is that mindset changes. Now, money today has no borders. And many people in government and bureaucracy and industrialists understand that if money comes from anywhere, if it creates infrastructure, creates pharmaceutical new medicines, promotes R&D, provides services, creates jobs, then it doesn't matter where the money is coming from.
Okay, if I can just interrupt you, sir, and go over to Mr. Saurabh Chandra. As a man who's been there, done it, sees it all, do you see that change in mindset? Have the foreign investors, do they see that change in mindset happening in India? And if so, in which particular sector are they more open to investing?
The Ernst & Young report is only the latest in a series of reports which have placed India as a top investment destination. The UNCTAD 2013-15 report places India at the 3rd position. The A.T. Kearney report places it at the second position. The Japan Bank for International Cooperation, in the medium term, places it at the second position, and in the long term, at the top position.
But we are talking here about attractiveness. If we look at the same UNCTAD report that you quoted, in terms of actual receipts, we've actually slipped. And we get less than not only China, of course, who's been our bugbear, but less than even Brazil, a third of what Brazil received last year. So what explains that difference?
I'm talking about the conclusion part of it.
Okay.
In spite of everything, that is how they have ranked us.
Okay.
In the last 14 months, a lot of measures have taken place. They are being reflected in what E&Y has come out of late. Certain sectors, for example, retail, we should split between single brand retail trade and multi-brand retail trade. Single brand has seen a lot of action. Civil aviation has seen a lot of action. Telecom is seeing a lot of action. So there are places where there is action. There are places where a lot more needs to be done to bring in dollars. Manufacturing is one area which is completely on the automatic route, but it hasn't seen the kind of inflows. And that is where the questions of ease of doing business, attractiveness come into play.
Agarwal, I've just heard the Minister as well as the Secretary of DIPP talk about the numerous changes that the government has initiated. A company like yours, why is it that you're not able to kind of get more enthused by India? What is holding you back? Is it the doing business where we slipped from 131 to 134? Is it the stories of corruption? Is it now, at the moment, political uncertainty? What is it that is really holding you back?
So first, Maitli, I think, you kind of introduced us as GE as not having invested in India over the last 100 years, and I'd like to correct that.
Not the scale that you could perhaps have.
And I'll just come to that. But I think we were one of the first to actually introduce the whole concept of outsourcing, and that's how outsourcing started in India. We were the first to set up the Innovation and Research Center in India, and that's how the whole series started. We recently announced more than 1,000 crores of investment in manufacturing for a plant that's coming up. That's in phase 1, and we've also now announced about expanding that to phase 2. So the point I'm making is that we have been invested, and in a manner of speaking, I think we've been a step ahead, looking beyond just what is obvious and the dollars kind of coming in. But let me just take a step back. If you look at a global corporation like GE, and you look at all the possible investment opportunities you have across the world, the first point I'd make is that India is not the only country that has challenges and problems. There are many countries around the world that have challenges and problems. Sitting within India, maybe they tend to get slightly exaggerated. But believe me, you go around the world, many countries have one or two challenges, which are similar. Some might be different, but they make making business in those countries more difficult. Maybe we are going through a phase which is slightly where these challenges are more accentuated. Okay. Now, if a global company looks at how do you make a decision on whether or not to invest? And I can talk about manufacturing. I think there are two crucial things that one would look at. One, the scale of the market that's on offer. And secondly, that if you do invest, would that investment produce goods and services which are globally competitive? And I think if you look at India from that framework, the scale of the Indian market, at least for manufactured products that we make, which is in the infrastructure space in the high-end capital goods, I would argue that the scale is limited. And therefore, it is necessary that whatever we do over here is globally competitive. Mm-hmm. And I think if we look at manufacturing from that dimension and that lens, I think India is a very attractive place to do manufacturing, provided you also utilize the intellectual capital of bringing in something more than just metal and hardware. That's the way we are looking at India. Okay. That's the reason we are investing as we go along. And we find a lot of promise in the market.
Mr. Bhargav, you really didn't have to say that Suzuki finds India attractive. It clearly does. But what is it that really attracts Suzuki to a country like India? And you've done, as far as Suzuki is concerned, you've been in India, you've stayed there, you've brought in FDI, you're in manufacturing. And that's where the jobs have to come. GE, yes, they do invest in services. Not that service is not important. It is very important. But if we want jobs, which is what we want for our people, to realize the demographic dividend, then we want companies like yours to come into manufacturing and stay there in manufacturing. What is it about India that attracted Suzuki and it makes Suzuki so sure that they're never going to exit?
Let's be clear. Suzuki came into India in 1982, well before any of this FDI regime started. And those who remember, will remember that Suzuki came into India under some very special circumstances. It was not a normal investment made when people come and do a due diligence of the whole environment and then decide, yeah, this is a great country to invest in, anything like that.
But it stayed.
After that, the way the project has grown and the way the Indian market has grown and the way the company has performed, there's no question of going away from here, because starting with a project of 100,000 cars a year, the company today has an installed capacity of 1.5 million cars a year, and no extra money has actually come in from Japan, except for that little bit which was involved when the equity ratios changed and government sold its rights to Suzuki in the rights issue and all that. But otherwise, our capital in 1988 was 132 crores, no, 50, when it became 50%, 92 it became 132 crores, but it's 150 crores. So there's been no real inflow of capital. But the point I'd like to make is that are we talking about the potential of India as an attractive destination, or are we talking of India as an actual destination where capital flows in, and especially in the manufacturing sector? Because as Saurabh said just now, in the manufacturing sector, there is absolutely minimal inflows of FDI for this sector. We have to understand that people abroad today have many more choices where to invest than they ever had. And they invest in places where it is easier to do business, quicker to do business, and where the risks are lower and where they expect profitability to be a more assured thing than what happens. Now, by all these criteria, I think India has performed in a manner which doesn't encourage people to invest here.
Sanjay, would you agree with that? Because on the one hand, he says, here's a foreign investor who's brought in money to India and has seen India grow into one of the largest contributors to the profit of the company and hasn't had to invest any more. So what could be better for a foreign investor if you can bring in X amount of money and have it grow so hugely and not have to invest any more? Even if the same problems of doing business in India are there in the case of Maruti also. But they've still done so well. So what is it that holds companies back? I mean, you should know, because you're dealing with companies, as I said, as Mr. Bhargav has said, who have opportunities to invest in so many other countries. So why India?
Well, I think why India is pretty clear. So, it's a big market, and I think from a private equity point of view, and I see some of the colleagues in the audience also from private equity, they represent really long-term capital. So I think in terms of long-term, there's no doubt that we all have the horizon for sticking in there. The real thing is, ultimately people look for returns. Let's even forget about complexity of risk-adjusted returns, just returns. And, just at a very, very broad level, today's Economic Times article is very telling how much money private equity guys have probably lost, not made. But let's say we can even look over that last 5 years and look ahead and say, look, we still have the appetite, because the people who back us are very long-term endowments and pension, pretty much as long-term as the way GE would look at a market. So we have the market, we have terrific management, we have great business models, and everything in India can be grown. But the problem is, at least my experience is, after you've invested, things have not materialized. Now, for one reason or the other, I think the previous panel did a fantastic job of laying out whatever comes in the way. So I don't want to repeat that. So we've got a range of investments from consumer to some IT to some industrials. Industrials are suffering the most. And it's amazing that a country that needs to be built, actually hasn't built not in agri and IT, but built, is the least amount of money going in there, whether it's manufacturing or infrastructure. So, I don't know what to say, but the first panel I thought summarized very well, so I don't want to bore you with that. I think I just want to leave you with a slight note of optimism that at this point in time, there is so much capital available for India, but it's not going to flow in just because you say it's got to come and there's a big opportunity. You know, the Canadians were in town yesterday and they keep coming. They have 17, 20-year money. The Americans have a lot of money. The Scandinavians, there's just so much money that is waiting to come in. But nothing is going to come till you can deliver predictable returns. And I'm not saying there have to be 20% returns, even if they're 12, even if they're 8. They have to be predictable. And you'll be surprised, the pools of capital available. But today, the way things stand, I think it's a pretty tough fight for money.
Mr. Mittal, when the Bharti Group invested abroad, what is it that they were looking for, and what is it that really made them say that, look, this is a country that makes sense for us to invest? And would they be the same factors that foreign investors would look at when they're looking at India?
You know, we are not the only group which is invested outside. But let me just, pick of the points that have been raised here. When everybody talks about India as a great destination, it reminds me of Indian tourism. We've got great places. Probably better than Switzerland. But to reach that destination can take you hours, if not days. And similarly, the condition of Indian, is there that everybody puts the reports out, refers to one or the other and saying we're a great destination. Of course, we're a great destination, but the process to reach the destination is very tough. You heard Sanjay, you heard him saying that, and Mr. Bhargav saying the same thing. So it's going to be a difficult task if we don't put our act together. For companies like us, we invest a lot in India. It's not that we are investing outside, we have stopped investing in India. It's not either or, because both markets are attractive, both markets are which are growing, the population size, the demographics, all that is there. But of course, when we go out and look out in Africa, it's a challenging market. But I've always said, if you can drive in India, you can drive any part of the world. So you know how to manage the risk factors. So Africa is challenging, but again, a continent which is, 16-year age median, 1 billion people, Indian business model which can go and, replicate there. But I always believe the companies at home must be strengthened for us to go invest outside. If we are weakened internally, it's very difficult to go invest outside. So if truly an Indian company, an Indian brand can go and, put their flag in 20 countries in Africa and grow there, only on the back of Indian growth. So if the Indian growth gets stymied, it is a problem that we face.